Okay, good morning, everybody. Today is Monday, June 23rd, 2025. You're in the live trading room. Glad you're here. Hope you all had a wonderful weekend. Here is Friday's trades. I took a few trades after we got off and managed to get for plus 17 on Friday, but ended up the week with 1620 based on our 10 contract per trade size. So we had just a had that little bit of swing high up into the high of the day yesterday or Friday. Excuse me. Let me get out my drawing tools right here, and then we had this long, slow sell-off all the way down to the end of our morning session. Um, had a couple of negative trades in there, but was able to come back in the afternoon and make a few more trades and get out of that. So I've made a decision around if we should end up a session in negative, we're going to continue trading until we're out of that. So let me let in somebody. So that's what we're going to start doing. And I'll talk more about that later. Anyway, SPY closed Friday at 593.78 and is currently sitting at 595.22. So we do not have a gap play this morning. Let's head on up. And that's where we are currently. Let's head over to the option chain. And we are going to be trading today's expiration, which is, of course, the 23rd. Like I've said before, prices are pretty low these days. So you can go into tomorrow's expiration, pick up a little more time value, or even go out to Friday, like Keith does, and pick up a bunch of extra days of time value, just in case. So if you can afford to do that, it's a good idea to go to tomorrow or even Friday's expiration. But I'll be trading today's expiration, and it looks like, just to start out with, I'll be at the 593 on the call side and the 596 or 97 on the put side, probably the 597. We have 1.8 million already traded in the underlying asset in pre-market volume. And let me pull up, no, that's not the one I want. Uh, let's see here. I don't have it up currently. I was going to see what reports were going today. Doesn't look like we had anything at 8:50 or at 8 o'clock this morning. So we'll see. Anyway, let's go back over to our charts. And let's make sure that we have, like we do every day, 20 cents between each of our hash marks. You always want to set up our charts this way so that we're looking at the same size charts from day to day. Let me move that off to the side here and get that to 20 cents. We've got less than a minute before the market opens. I'm going to get this set up. There we go. 20 cents between. And then I've loaded in the 595 call into active trader on this side. We've got a number of visitors this morning, so we're going to be doing more teaching than we normally do each morning today to kind of help out our new folks who are joining us today. And I want to welcome everybody who is trading with us today. I think that's great. And all right, we've got 10 seconds before the market opens. Here we go. In 5, 4, wow, 2, 1. Well, that started early. I'm not sure why. Okay, no problem. My clock was a little behind, apparently. Anyway, we've got price moving down to VWAP right off the bat. Keith is not with us today. Keith is still visiting his mother down in Florida. He'll be with us tomorrow. and has promised me from evermore he will be with us after that. We're already over 2 million, 2.4 million already in the underlying. Let's see, the broader markets haven't reported yet. Waiting for those to come up. Still pressing down a bit. So we'll keep an eye on that 596 on the put side. 596 strike put. Okay, so we got Dow is down by 68, Nas is down by 45, S&P is down by 5. We typically let the first 5 minutes go by, kind of let the craziness of the first five go by before we get into a trade, unless it breaks out very dramatically. That is, if price starts dropping from here pretty dramatically, we'd look at getting into a put trade. Now it's rebounding, trying to get through VWAP again.
Tim, did you already mention there's a 9:45 a.m. flash meeting?
No, I didn't. Thank
Okay.
you.
Yeah, sure, no problem.
Price trying to push down some more, but finding some resistance. I'm going to put a, well, we'll hold off on that. All right, let's head to the 595 on the put side. 595 strike put. It's pausing here a bit. Both our MACDs are definitely in the put bias position. All right, we're in the 5th minute. Getting some pushback on price now. Price beginning to rise a bit. There we go. I'll be at the 593 on the call side. 593 strike call. If it should turn around. All right, stand by on this 593 on the call side. See if it breaks through VWAP.
Tim, did you say 593 call or 595 call?
593 on the call side.
Okay, thanks.
All right, stand by. All right, I'm going to enter this 593. Whoops. Let's make sure I've got the right account set up. 593 on the call side. Trying to get filled here. Ah, it's passed me by. Dang it. Rid of that. Going back to the 593. Slip right in. I did not get into that trade. If you're in the trade, it should be okay. Going back to the 594 on the call side. 594. I'm going to enter this. All right, got into the 594 at 222. All right, I'm going to take some profit here at 234. So 222 to 234. Yeah, it's continuing to climb. If you're still in this trade, you might want to go ahead and take profit. We're going to put in a demand zone at the bottom here. And I'll explain to our newcomers what that means in a little bit. Okay. Price is still climbing. Here, let me turn on my camera. Sorry, should have had that on from before. Price is still climbing. And Dow is now positive by 39. NAS is still down by 19. S&P is positive by 9.5, almost 10. I'm going to go back to the 594 on the call side. I'm going to remove old drawings, just get rid of some things. There we go. And now I'm going to put in another 100,000 line on my volume. while we wait for a trade to come along. Turn that on. That on. 3, 3. There we go. So what we want to do this morning is get a few trades under our belt, and then we will go into some teaching because we have a number of new people who have joined us this morning. Good volume. Got over 5,600,000 already traded on the underlying. Dow's up by 66 now. Nas down by 15. S&P up by 11. Volume or price is still climbing. It's going through a little bit of consolidation right here.
Three minutes before the flash manufacturing announcement.
Thank you.
Sure.
Yeah, we've got a report coming out in a few minutes. We'll see if that affects pricing. It can. All right. Well, while this is going through consolidation, let me give our new folks a tour of what we're seeing here. I don't know if you noticed, guys, that SPY has a new symbol. I don't know if that's done by Thinkorswim or by SPY, but it has, you can see the S up in the upper corner of each of the charts. That's a change from what it was before. So our first chart, we have 3 charts here and an instance of active trader. The upper left chart is a regular 1-minute chart with a volume subchart. You'll see there's a red line here that is set at 100,000. We get our best price movement when volume is above 100,000. So we mark that and kind of keep an eye on that. Doesn't necessarily figure into our trades, but we like to see how volume is doing as we, go throughout our session. Still, you can see price is still in consolidation. It's going sideways. And we have a rule about that. It's called the messy middle rule. We call this section that we're going through right now a messy middle. And the rule is 9 times out of 10, price will come out of the messy middle the way it came in. So since price was rising when we started the messy middle, we can expect price to rise 9 times out of 10 times. It will rise out of the other end. All right, the chart below our 1 minute, the lower left, is a 5-minute chart, just a regular 5-minute chart. Each candle is worth 5 minutes. And we use the 5-minute chart to mark our zones on, and I'll get into zones and as in a little bit. Below that is a custom MACD, which stands for moving average convergence divergence. What to know here is that when that blue line is pointing up and going up, we're looking for a call trade. When it is going down below the gold line, we're looking for a put trade. Price is trying to rise out of the messy middle. And then over on the lower right, we have another 1-minute chart, but it is in a Heiken-Nazi view. And Heikenasi, it's different than regular 1 minute in that it averages price over a couple of candles. So it takes out the price jitteriness that we see in the regular 1 minute candle. It helps us to see trends and breakouts, well, trends more clearly. And we trade, this is important, we trade breakouts and trends. For instance, that first trade, once we got over VWAP, was starting a trend. You can see it here. And we got into that trade a little bit after we crossed VWAP. VWAP, it's the purple line, stands for volume weighted average pricing, is a zone in itself. All right. And then below the Heikenasi chart is a custom MACD again. And it's custom in fact that it's tuned to the price movements of both SPY and QQQ. Since SPY and QQQ are the two ETFs we trade, um, it's timed to the price movement of both of those. All right, so you can see price is kind of breaking out toward the top side, as we would expect it to do 9 times out of 10 times. So I'm going to go back to the 594 on the call side, 594 strike call. Now, what you don't see is my option chain, which is on a second monitor. All right, stand by to get into the 594 on the call side. All right, I'm going to go ahead and get into this trade. And I don't know why it's not filling. Come on, fill. There we go. Finally. I got in at 266. All right, stand by to take some profit. Let's go ahead and take some profit here. Out at 277, 266 to 277. So that's two good positive trades starting out this morning. So price basically is in two states. It is either in consolidation right here, or it is moving or breaking out. So we wait for consolidation to end and then take advantage of the breakout that happens after, which we did. So price is clearly on a call run right now. That is, price is moving up. And we're going to put a supply zone in on this price agreement here. We're probably going to end up moving it up pretty soon. Yeah. All right, we had a doji. See that white cross right there on the last candle's a doji. Usually means a reversal. A price reversal is imminent. And you can see price did reverse a little bit off this red candle, but it looks like it's making up for it pretty immediately. And we did, let's see, you can see at 9:45 we did have an increase in volume. That report came out. I don't know the results of it, but we did get some additional volume, and it looked like the candle did move up uh, quite a bit, but came back down. Both our MACDs have gone into a call bias position. That is, the blue lines are both pointing up. That's good. Let's go back to the 595 on the call side, and we'll just monitor this strike. Now on Thinkorswim, there's a couple of ways to get in and out of trades. You can use the active trader, which is the upper right here, and you can see it says buy ask and sell bid. You'd hit buy ask to get into a trade and sell bid to get out of a trade, unless you have a template set up. Put a single in there. There we go. And then the other way is through the option chain, which I have on a second monitor, and that's what I trade off of. Or I should say that's how I get in and out of trades. And if you stay with us and you sign up with us, you'll have complete training on what that means. All right. Over at the 595 on the call side, stand by. I'm going to go ahead and enter this 595 on the call side. And I'm in at 232. Come on up. Maybe going into some consolidation now. Yeah, looks like we're entering some more consolidation. Come on up. Come on up. All right, stand by to get out of this trade here. Let's go ahead and get out of this trade. Come on back up. Still in this trade. Tried to get out and it wouldn't fill me, so I'm still in it, obviously. So it dipped down a little bit out of that consolidation and then immediately went back up.
Top of the top and existing home sales in about 30 seconds.
Okay, thank you. Don't want to be in this for the pop at the top. Let's see, we may get out of this. I'm going to go ahead and take profit here right for the pop. And there's the pop. Yeah, should have stayed in a little longer. Anyway, 232 to 250. So if you're still in it, you may want to go ahead and get profit now. So we have a thing called the pop at the top. Something that we've noticed over the years of doing this is at 10 o'clock, oftentimes there's a bit of news or report that comes out that affects the market. And sometimes for no reason at all, we will simply get a large move or a large tranche of volume that comes in right at 10 o'clock that will move the market. And that's what happened this time. So we generally don't want to be in a trade during the pop at the top, which is why I got out just before the pop, simply because we don't know which way the market is going to move. So we got three positive trades in this morning. Let me adjust some charts here a little bit. Price continuing to rise. So I'm going to go over to the 596 on the call side, 596 strike call, and we'll watch this. Oftentimes when we get a pop-up or a quick rise like this, it will just as quickly deflate. So whenever we're unsure of a trade, we can wait a minute. Just wait another minute and see what happens with pricing. But we do have a strong uptrend going on right now. All right, so let's talk about zones. Since we've got a demand zone and a supply zone in, this is one of the two indicators that we use. Whenever price, if you look over at the 5-minute chart right here, you'll notice that price came down, stopped, reversed, and went up. Whenever that happens, we call that a price agreement, and we mark it with a zone. And the bottom zone is called a demand zone. And the same is true on the other side. When price goes up to a point, reverses, comes down, for instance, like so, we mark that with a zone and call that a supply zone. And these mark some important points for us because price tends to, it either will bounce off a zone or it will punch through a zone. When those happen, those are trade opportunities for us, as well as ongoing trends like we're in right now. And in fact, we're going back to the 596 on the call side, 596 strike call. See if we're going to go into some more consolidation here. So strong uptrend this morning. Been able to take 3 trades off of this trend going up. So our zones also, they mark supply and demand, resistance and support, however term you want to use. All right. 596 on the call side. Stand by. All right, I'm going to enter this 596 and in at 248. Getting lots of volume in. Continue this trend. Stand by to take some profit here. Let's wait for it to come back up again. Get back up there. All right. I'm going to jump out of this trade here at 260. 248 to 260. Got a nice little push up there for plus 12. So that's 4 trades, all positive. Let's go. There's 30, 42, 53, plus 53. So we've made our nut for today. Price is continuing to rise. Very, very strong trend up. Probably getting close to a reversal here of some sort, but we are going into more consolidation now. Right there. So we'll see if the messy middle rule holds here. Looks like we're breaking down. So this is the 1 out of 10 times that it went the other direction. Let's see, what do we got on volume? Volume is 11,574,000. We've got Dow is up by 164 now, NASDAQ up by 90, S&P up by 30. So positive broader indices this morning. You can see we are forming a supply zone up here. On our 5-minute candle. And what's happening right now is we're going into a little bit of a sell-off. Price is going down, so there's some profit taking going on right now. And remember, I said that we should have some sort of reversal pretty soon. Well, this is it. Price kind of bottoming out here, beginning to rise again. Had pretty good volume all through here. Not a lot of minutes below 100,000. Just, well, one that I see. Yeah, just one of the minutes below 100,000. We'll see if our supply zone holds up. Price is rising again. You can see on our MACDs, we have mixed indicators right now. We've got our 5-minute MACD is pointing up and our 1-minute MACD is pointing down. So we'll wait for those to be in a little more agreement before we consider another trade. But we've got 4 positive trades up plus 53 right now. Oh, just a note, Cliff, you and I are meeting at 2 p.m. Today, and just log back into the morning's, use the morning Zoom link to log back in at 2 p.m. Eastern, if you would, sir. See if we're going to hold on to this supply zone. It's going to go in 4, 3, 2, 1. Bingo. Okay, we got us a new supply zone. So let's go ahead and put that in. There we go. Now, you'll see now how we've got a zone up here now, and watch price bounce off of the zone as it's doing right now. And it may do that several times before it breaks through. Got 12,796,000 traded on the underlying asset, which is SPY, the ETF. Dow is up 182, NAS up 97, S&P up 31. If you've just joined us, I know we had a couple of folks sign on here in the last couple of minutes. We have 4 trades, all positive. The prices come back up to the supply zone, and we'll see if it breaks through or if it bounces off again. There it goes, breaking through. So we'll keep an eye on the 596 on the call side. 596. Actually, let's move to the 597 on the call side. So price is continuing this trend up. When I say price is going up or down, obviously a green candle, which is a bullish candle, price is rising. Red candle is a bearish candle, price is going down, but price is always on the leading edge of the candle. So going back to the announcement I made earlier, very beginning, as we're trading throughout the morning in our session, if for some reason we're not positive by the time we hit 11 a.m., I'm going to add an extra hour of trading to our session to hopefully get us positive. Because I know that a lot of days I trade in the afternoon or trade a little bit later on, add those trades in, or get into some trades shortly after we get off. I want to be able to include you in those trades as well. Looks like we're in a little bit wider consolidation now. And we don't like to enter trades when we're into consolidation. Sometimes we can't help it. Price is moving, we'll get into a trade and then it goes into consolidation. There's not much we can do about that. Our 1 minute Heikin-Ashi is crossing to the put side. So we've got a mismatch in our MACDs right now. MACDs being these, let me show you, being these guys at the bottom of the 5 minute and the 1 minute charts. And see, again, price is bouncing off of the supply zone. So there was a trade opportunity once we broke through the supply zone, like right here. But what had happened is price jumped up real quickly to here. So there wasn't an opportunity to get into it. Then it reversed a little bit. We weren't going to get into a trade then. Maybe could have gotten in here, but that'd have been tricky. It was just short lived before it went back down to the supply zone. So we were wise not to get into the trade here on this cross of a zone. But that's where we look for trades. Often is when we cross a zone, that creates a trade opportunity. If you saw the video that we run at 9:15, which is an orientation of what we do, you'll see that we often get into trades just after we cross zones. Comes price back down to the supply zone. Volume is beginning to lessen now. So when volume becomes less, especially less than 100,000, we start to see much thinner candles and not as much price movement. And we've got 14,261,000 traded on the underlying. Comes volume breaking through. Comes price breaking through the supply zone. So let's switch over to the put side. We'll just keep an eye on the 599 on the put side. See if this begins to sell off again. Markets are up pretty well, so not necessarily interested in a put trade at this point. Got some volume coming in on this minute, trying to reverse the direction of price. Our MACDs are both in agreement now. They're both pointing down. Kind of pointing us toward a put trade. Boy, that was a lot of volume that came in on that last minute. It was just the market maker trying to reverse direction of price and could only get it so far. We're back into some consolidation here. So we wait patiently to see which way it breaks. Since price was moving down when we started this messy middle, we would expect 9 times out of 10 that it would continue pressing down. And that's what it's doing. But it looks like we're just continuing a sell-off here. So again, looking at the 599 on the put side, 599 strike put. All right, we're a little over an hour into the session. We got 15,137,000 traded on the underlying, and I got to call up my Schwab again here. It's locked me out. Price trying to reverse here a little bit. Part of what we do in trading when we're watching price move like this is is to ask ourselves, is this a fundamental change in direction for price, or is this just a temporary state of profit taking and it will continue on its way up? And part of how I do that is I look at, what the broader indices are doing, see which direction the overall markets are moving, because that has an influence on SPY, on the ETFs. And then just be patient and wait. Price is back up to the supply zone. See if it's going to break through and head back up. So we will not be doing a put trade here, at least not yet. So what price is doing right now, this is what we call orbiting the zone. And this is just really the market maker moving price back and forth, trying to find a point of breakout. Ah, look at this. Price is bouncing off of the supply zone again. Five-minute MACD, it's about to cross. It's closing in on it. So we're continuing a bit of sell-off here. We'll see here in the next few minutes if price continues down. Got some good volume coming in on this minute. Price trying to press down. 5 minute MACD just about to cross. Our 1 minute MACD has already crossed some time ago. There it goes, 5 minute. So it looks like we are continuing this sell off here, but I'm not convinced enough to get into a put trade. Dow is up 100, Nas is up 102, S&P is up 28 and a half. So on SPY, we breached $600 last week on the price of it. It has fallen below 600 again. That's just part of the struggle that price goes through, because every time we get to a $100 mark in an ETF, it becomes difficult. It's a major milestone to get over that number. And so it may take a while to get over it again and stay over it and continue climbing. We don't care though. I mean, we're just, making trades whether it moves up or moves down. We don't care which way it moves, just as long as it's moving. And then volume has moved back below 100,000. Hey guys, you excuse me for a minute. I'll be right back. Okay, I'm back, and it looks like price is meandering sideways a bit. Okay. So while that is meandering, I'm going to bring up the 1 minute chart. And just this morning we had, oh, by the way, we turned former supply zones and demand zones gray. Once we get a new one, we just make them gray. So I'm going to do that real quick on this. And I'll teach you how to do these, how to make these. It's not a big deal. But we had this real nice swing high this morning, starting first thing in the morning, first of the session. Got into a little bit of consolidation and then up, a little more consolidation, then up. And we've made all our trades so far on this trend up, which we love. And this is what we wait for almost every morning, is for a trend to develop. And then we get the majority of our trades in on those trends. But right now you can see we topped out up here, and we've been price has just been meandering down a little bit. It's like it's kind of beginning to go back up, but no real trend at this point. So we just stay patient, wait for it to do what it's doing, and then get into next time it starts moving into a trend, get into some more trades. So, and as I was saying before, price moves from consolidation to trend to consolidation to trend. I'm getting a nice little push up right now. But we'll see if it bounces off again. But you can see we made 4 trades this morning, all positive, basically off of that long trend we had starting this morning. So when I say we trade breakouts and trends, that's what I'm referring to.
Tim,
Yes.
should our supply zone go up just a little on the 925, Kim?
Uh, right here.
Yeah,
Yeah. Yeah. We can move this up a
thank
bit.
you.
There is one there. Thank you. There we go. So we have a doji right here, that white cross. Typically means a reversal in price, not always. And in this case, it doesn't look like it's reversing, at least not yet. Price coming down. So that doji did portend a reversal in price. Both our MACDs are firmly in the put bias position. Got some volume coming in on this minute. This whole with price coming down, this is all just profit taking. And we'll get to a point at some point where that will reverse back again. So you may be asking yourself or asking the screen, Tim, why are we not taking put trades right now? Price is obviously going down. Well, notice that it's not really going down in a straight line. It's not a real strong trend down. It's kind of meandering down, and we're getting lots of little reversals in here, which is okay. They're just very unpredictable. And another reason why I'm not really anxious to get into a put trade is because our broader markets, the Dow, the Nas, and S&P, are all up. So the pressure in the market is toward the call side. And so you have to ask yourself, okay, again, is this a temporary profit taking, or is this a real price direction change? More and more, it's looking like a price direction change, but still, we're getting these, pretty substantial reversals in here. And what we don't want to do at this point with, 9 minutes left in the session is give back. We hate giving back money. Hate it. Now, put trade is looking a little more attractive. You can see in the last 10 or so minutes, we've increased our downward trajectory. Tomorrow, we're going to go through active trader and how to set that up to use to make trades. And we'll probably talk about the option chain as well. You can see on the Heikin lower right chart how we're seeing a clearer trend show up here in the last 10 or so minutes. You can see all the kind of jitteriness of price here. You've got, red, red, green, red, red, green, red, green, kind of candles going back and forth. But on our Heikin, it's all red, showing us a clearer view of this recent trend. But price may be going through some consolidation now in the last 3-4 minutes. Guys, if you want to enter a put trade, you can. I'm not going to at this point, but it looks like this direction is pretty solid. I just don't want to give anything back at this point. But this direction is picking up some momentum now. Now, one thing we haven't talked about is VWAP right here, our purple line, volume weighted average pricing. What that shows is the exact middle of pricing when you take into account volume. It's generally considered to be a more accurate measure of the middle of pricing. Now, VWAP acts as a zone on its own. We don't mark it as a zone because it's already marked by the purple line. But you will often see price has an issue getting across VWAP. So when prices, if you're in a trade and prices approaching VWAP, you may want to get out of that trade. Go ahead and take profit and get out of that trade because price often bounces off of VWAP and heads back in the opposite direction. So what I'd like to do at the end of each session is do a trade review. I'm gonna go ahead and do that now since we've got just basically a minute left. And let me bring that in and that in. Okay, there we go. So here's the entire day. You can see that nice long trend up that we took our 4 trades off of. So our first trade was at 937 right here. Shortly after it went across VWAP, which is a zone, as you know. We like to get into trades when it crosses zone. So we got in there and picked up 12 off of that trade. Next trade was at 947 right here. Again, we broke through a zone, got into this trade and picked up 11 on that. Our third trade was at 954. Which was right here, which was just not long after that other trade. We got in at 47, then at 54. So right here, had to, and the reason we got into this is because we were in a clear, our trend had picked back up after consolidation. So we got back into this trade. We had to wait for a little tiny pullback, but then it took off and picked up 18 cents off of that. And then our fourth trade was at 10:06. Right here. And again, reason we got into this is because we were still in this nice trend up. Price was still climbing. Got into that and got 12 cents out of that. So for plus 53 this morning. So that is all the trades we did today and the reason why we got into those trades. All of them were because we're in this nice uptrend. Now this happens, often we'll get into an early direction like this or, it going up, but after 4 or 5 minutes, it reverses hard. This is why we wait out that first 5 minutes of the market because there's often a turn, and we've gotten burned before on getting into these early directions. In fact, just a couple of weeks ago, we got burned a number of times that week on that very trade. So we wait until the real trend comes up. That's what happened this morning. We took those 4 trades. So that is everything for this morning. And that is it for today. I'll leave the charts up for a while. Cliff, I will see you at 2. Just log back in to the morning Zoom, and I will see you at 2. The rest of you, I hope to see you tomorrow. Have a great day. Bye for now.